HSBC has used IBM's quantum processor to improve bond trade predictions. Getting better, 34% better, at estimating whether a trade would execute at a quoted price. Hmm. Definitely sounds like something computers should be doing now. Quantum computers are doing it. The trial used mirrored data from real market conditions, looked at the prediction, but didn't actually place any trades. It's not yet been used in live trading. However, seeing a 34% boost in the accuracy of estimating whether the trade would close is probably a good thing. But complex financial predictions and potential for improved financial returns from this investment in quantum, we might get a new quantum bubble to make the AI bubble look small.
I'm breaking some news right now, Al. I've consulted my quantum computer over here, and I've uncovered a pattern, a very important pattern, and I wanted to let you know about it. Grifter's going to grift. That's the pattern. Um, yes, I know that the next thing after AI is going to be quantum. Why do I know this? Because eventually all hot markets cool off, all bubbles eventually deflate somehow. And then the people who want you to buy a thing need you to buy the next thing. And it sounds to me like quantum is where that's going to land. So let me give you a little example of why this story does not really pass muster with me. One, the reason why quantum computers are so good at what they do is because they don't think linearly through problems. So, for example, instant factoring of cryptography is because they can factor all prime numbers instantaneously, which means they can get the secret keys. The problem is that those are static inputs. And when you start monkeying around with the inputs and introducing uncertainty into what's going on, quantum computers really can't keep up with that. One of the ways that we've made encryption algorithms quantum resistant is by using lattice encryption algorithms, where you get to a decision point, you make a decision point, there are branches off that decision point, and I pick one of those, and basically you're collapsing all probabilities down. And quantum computers suck at that because there's too many variables to analyze. So, did they get an awesome result by feeding a simulated bond trading market into a quantum computer and then having the quantum computer pick out certain values and seeing if they matched up with reality, or in this case, simulated reality? Absolutely. Do you want to know what it couldn't simulate? What happens when all of the trading algorithms in the actual real market find out what's going on and start adjusting the way that they make trades based on what this quantum bond trading program is doing? Because we've seen this before, right? Anytime you just go to Google and search for flash crash, where something as stupid as a rumor that Steve Jobs had passed away causes the market to fall to a point where the circuit breakers kick in. Why are those circuit breakers there? Because most of the trading now is being done by computers and by algorithms. In that case, what we're seeing is the race to find a better algorithm, because that means that if I can execute the trades faster at certain prices, I can use the arbitrage in the market to make more money. And if all of that sounds like Greek to you, you're not the target for this. What they're hoping is that you're going to buy into using quantum computers to make a little bit more money, a little bit faster than all the other poor schlubs out there. Retail investors are really being left out in the cold. Most of the high-powered, get-rich-quick stuff is being executed by algorithms. And the hope now is that they can use quantum computing to accelerate those algorithms even further. But that's not how quantum works. There are too many variables in this equation to balance it out quickly and cheaply. And I'm not even talking about the fact that it takes massive amounts of power and cooling to run quantum computers today. So I'll wait on this bubble and see how long it takes for it to inflate.